Welcome to the webinar on key clarifications for complying with Companies Accounts Amendment Rules 2022 for CSR. My name is Shubhangi Kichlu and I'm the Associate Director of Growth at Goodera. I'm joined today by my colleagues Tejashree Tate, Associate Director Business Engagement, and Kajal Batra, Associate Business Engagement. Thank you so much for joining us today. Our agenda will be to go through CSR Form 2, which has been introduced on 11th February. We will follow this up with the questions from the audience and any clarifications that may be required. Before we get any further though, let's take a moment to understand the evolving landscape we are in. Over the last 2 years, we've had a range of amendments and FAQs that have continued to introduce new variables into Section 135 of the Companies Act. What we have seen is a mixture of two things. For companies, flexibility introduced through the addition of ongoing projects to allow companies to undertake multi-year engagements that deepen impact, a movement towards greater accountability through the introduction of CFO certification of utilization, the introduction of impact assessments to measure the success of projects with significant budgets, combined with a range of penalties. This has been a combination of a nudge and a push towards compliance. For nonprofit organizations, there has been greater scrutiny introduced for implementing agencies who are conducting these projects by recording their details through CSR Form 1 and by pushing for renewals of ATJ, 12A, and re-registration of FCRA. With the introduction of CSR Form 2, which like CSR Form 1 is in e-form, there will be greater access and transparency and ease of tracking. I see a tighter ecosystem of compliance driven by digitization for both the implementing parties as well as the companies acting as donors. The challenges I see for companies, beyond simply the administrative overheads for managing this compliance, is also to deal with understanding and managing the social development landscape that they must now operate in. By asking for monitoring and evaluation of projects and impact assessment, there is an indication that companies must be responsible for the outcomes of their projects, which is challenging when social impact is not their forte. Sourcing the right partnerships, determining the credibility of organizations they may choose to partner with, and working out the determinants of project success and how to measure them will remain a challenge without specific external expertise. This makes it clear that the increasing complexity of CSR law and its management has the potential to become a compliance risk. Now, with that outset, let's move on to CSR Form 2. Some key points to note about CSR Form 2 is that it was introduced on the 11th of February this year and is required to be filled for FY 2021 and onwards. This is an e-form required to be filled digitally. The deadline to submit this for 2021 is 31st of March 2022, and for FY 21-22 and onwards, it will need to be filled as an addendum to the applicable annual filing forms listed on this slide. The introduction of this form has not amended any of the CSR rules. The CSR form is to be filled in addition to the CSR annual report attached as an annexure to the board's report. I'm now going to hand over to Kajal, who will start taking us through CSR Form 2.
Thanks, Shubhangi, for the introduction and briefing our audience about the newly introduced CSR Form 2. We will next look at the various sections of the form. To start off with, the company information. Right? So points 1 to 3 are asking for company-related information. These are not requested for in the MCA report. The CIN number, the financial year followed by the company, the SRN of the form filled for standalone financial statements. These can be obtained from the CS or the compliance teams in charge of these filings in your company. In addition, the CSR Form 2 is also asking for information that triggers the CSR eligibility of your company. Information on net worth, turnover, and net profit has been requested for. The next section on the CSR committee, the website disclosures, the impact assessment, and the details on the amount set off in the reporting year have been asked. To start off with, on the CSR committee, these details are the same as requested in the MCA report, just with one additional disclosure on director identification numbers of all the directors in the CSR committee. Point 4B is asking for details on website disclosures. As mentioned under the CSR rules, all companies that have a website must disclose the CSR projects, the CSR committee composition, and the CSR policy on their website. These details have to be made available for FY21 as well. The rule is mandatory for all the companies that have a website. In case your company does not have an India specific website, Goodera recommends you to make these details available for public access through a web page on your group companies or the global website. Point 4C is asking if an impact assessment was conducted during the reporting period. You can select not applicable as the option in case the impact assessment rules are not applicable to your company. And you can select a no in case these rules are applicable to your company, but the impact assessment was not undertaken during the reporting period. This could be due to multiple reasons such as mandatory minimum 1 year waiting period or decision on allocation of the CSR budget towards impact assessment, since the impact assessment can be undertaken after minimum 1 year of waiting period, but there's no cap in the number of maximum years that it can be undertaken during. So for FY21, since the rules are applicable after 22nd January 2021, the response to this would be a no. Right? In case you have any further questions on this, please feel free to drop in them in the chat box. We will take it up at the end of the webinar. Moving on to the excess expenditure available for set-off. So point 4D is asking if any excess expenditure has been made in the 3 years preceding the reporting period, and if the company has decided to set it off during the reporting period. Right? So excess expenditure made in the years prior to FY21 cannot be set off towards the CSR obligation of succeeding years, since the set-off rule has been introduced through the amended CSR rules in 21 and is applicable to FY21 and onwards. Right? The only exception would be in case the companies have made an excess expenditure towards the PM CARES Fund for COVID relief in 2019-20. The MCA had released a notification back then for allowing the companies to set off that excess expenditure in FY21 only. Okay? Hence, this table would be empty for the form filled for FY21, and for the form filled for FY22, your preceding year to be considered would be FY21 only and none before that. So moving on to the next section, which is on 2% of average net profit calculations. So point 5 is asking for information on the calculation of average net profits of the company. It has been clarified through the amended CSR rules that the average of net profits has to be considered for calculating the obligation. So if the company is more than 3 years old, then an average of 3 years net profits would be considered. And if it is less than 3 years old, then all the years average of net profits would be considered. As mentioned in the CSR rules, while calculating the 2% obligation through these average net profits, any income received from an overseas branch of the company and or any dividend received from a company in India that itself is compliant with the CSR rules will need to be deducted from the net profits. Point 6 is asking for details on the total CSR obligation calculated for the year. That is the amount that will be spent by the company during the reporting year, right? Which is 2% of average net profits plus any surplus earned through the CSR projects minus any excess expenditure that will be excess expenditure of the preceding year that will be set off during the reporting period. Okay? So in order to calculate the surplus from your CSR projects, the corporates can ask their NGOs, to provide a declaration for any interest income earned through the CSR funds provided, any revenue received from CSR projects, or any disposal or sale of materials under CSR projects, and other such income received from the CSR project. Okay? And under the amount required to be set off, the company would need to enter the amount that they have decided to set off against the obligation of the reporting period. The MCA allows the companies to set off either full, partial, or none of the excess expenditure of the preceding year in the reporting year, as you have maximum 3 years of time to set off that excess expenditure. So moving on to the next slide, which is on CSR spending in ongoing and other than ongoing programs. So point 7A and 7B are asking for details on the ongoing and other than ongoing projects undertaken during the reporting period. Right? These details are the same as the details requested in the MCA report. The companies would first need to confirm if they undertook ongoing projects, other than ongoing projects, or both, and provide the same specific details for the same. Right? In case of any questions, please feel free to drop them in the chat box. So moving on to the next slide. Point 7C and 7D are asking for funds spent in admin overheads and towards impact assessment. This is again the same as in the MCA report. Right? Moving on to the point 7E, 7F. So the FAQs released in August 21 have clarified that the amounts utilized in the CSR projects would account for CSR spending for the corporate, and mere disbursal of funds would not suffice. And any unspent amount will need to be transferred to the unspent CSR bank account or the fund specified in Schedule 7. Right? So in connection with this rule, under point 7E, information on amount spent by the corporate, that is utilized in the CSR projects, would be entered. Under point 7F, information on amount unspent by the corporate, that is the amount unutilized by the NGOs or unallocated towards any project, or in case any excess expenditure has been made, that would be entered under 7F. And under point 7G, the funds that have been allocated but not utilized in ongoing projects, which will further need to be transferred to the unspent CSR bank account, will be entered. Under point 7H, information on the unutilized and unallocated funds towards any project which will need to be transferred to a fund specified in Schedule 7 would be entered. So point 8, that's the two tables that have been listed on the screen, are asking for information on the amounts that were actually transferred to the bank account or the Schedule 7 fund, and if there has been any deficiency in making these required transfers due to multiple reasons such as missed timelines, ambiguity in rules, and so on. In case of any questions, please feel free to drop them in the chat box. I would now like to invite my colleague, Ms. Tejashree, to walk us through the remaining sections of the form. Thank you.
Thanks, Kajal. I'll be covering the next section, which mainly deals with treatment of unspent amounts for the preceding 3 financial years and a couple of manners in which such amount can be spent. We'll also look at the point of spending an unspent amount from years which are prior to that, which is 14-15 to 19-20. So on the current slide, as you can see, point 10A is asking for clarifying if a company has spent any amount from the unspent CSR bank account, which was created in any of the 3 preceding financial years, and this spend has happened in the current or reporting financial year. So as per the CSR amendment rules, as we all know, any amount unutilized in the CSR projects of 2021 and onward should be utilized in the upcoming 3 financial years. But this rule was not applicable to CSR obligations of financial year 1920 and before. Hence, this table should be empty when filing this form for financial year 2021. And in the form of 21-22, you can consider the preceding year to be only 2021 and none before that. For the years of 2014-15 till 19-20, there is a separate section which will follow this section, which is section 11, and we'll look at that subsequently. Coming back to this table, the table here will require details of such spending divided by financial years. So this is not project wise, but financial year wise. And for each of these 3 preceding financial years, you have to enter the amount transferred to the unspent CSR account of that particular year, the balance in the account at the beginning of the reporting financial year, and in that particular reporting financial year, the amount that you have spent from this account. In case any amount was transferred to a fund mentioned in Schedule 7, those details also need to be reported. And you have to also mention any amount remaining in the unspent CSR account at the end of the reporting financial year. If there is any unspent amount from preceding years, which has neither been utilized in any project or not even transferred to Schedule 7 fund within 3 years, the last column of deficiency is for such amounts. Now we are going to look at 2 ways in which such unspent CSR account amount of previous financial years can be utilized. So it could be utilized on ongoing projects, or it could be utilized on new projects. So we'll look at both these cases. So currently on this slide, we are talking about ongoing projects from preceding financial years. So the details about using the unspent amount of preceding financial years for ongoing projects has to be mentioned here project wise. And these projects could have started in any of the 3 preceding financial years. If you see in the table, the initial columns are asking for these ongoing project details such as project ID, name of the project, financial year in which the project has begun. For everybody's information, project ID is a unique number that is provided to the CSR project by the corporate who's funding it. Further, if you see in the column 5, you have to mention the amount that has been already spent on this project as on the first day of the reporting year. And then in the column 6, you have to put the amount that you have spent in the reporting year on such project. In the subsequent column, you have to, which is column 7, is the addition of both these earlier columns, basically asking you to put total amount spent in the reporting year plus before, years earlier to that. In the last column, you have to mention if this project is still ongoing or completed as on the last day of the financial year. If there is any confusion or any questions, you can put the questions in the question and answers section and we'll address that. As I mentioned, spending on new projects is also an option, and there could be a scenario where unspent amount from a preceding financial year is utilized in the reporting financial year on a completely new project. And this reallocation of unspent funds towards this new project has to be approved by your board, by the company's board as per the amended rules. Such new projects could be either ongoing or other than ongoing, or both types. These are the 2 tables on the screen right now, which are seeking the details of such new ongoing or other than ongoing projects. The details required in these tables are very similar to what we have been used to filing in the MCA report. And you can have a look at these columns in the slide for your information. I would just like to mention one point in the right-hand side table, which is the table for new other than ongoing projects. It's similar table to the table on the left-hand side. Only one difference is it doesn't have year of initiation of that project, because by design, other than ongoing projects are contained within just one single financial year, which is your reporting year. And that's why there is no mention to year of initiation here. In the beginning, as I mentioned, what happens if a company has underspent in the financial years 14-15 up to 19-20, because that time we know that the amended rules were not in place, and anything about unspent funds and how to treat that, even identification of unspent funds was not happening. So if there is a company who has underspent in these years and wants to kind of compensate for that in the current reporting financial year on any project, this table can be utilized for that. So column 2 here is asking for financial year from where the unspent funds are being utilized on a project in the current financial year. Rest of the details about the alignment with items in Schedule 7, the location of the project, mode of implementation, and amount spent on such a project are pretty similar to all the other tables. The last and important section of Form CSR 2 is about capital assets, which are created or acquired through CSR. So if any capital asset is created or acquired through the CSR funds in the reporting financial year, then details of such assets have to be mentioned here in this section 12. If you look at the table, starting with the number of assets created, you have to mention the particulars of this asset. So what is that asset exactly? The PIN code or the location where this asset exists as on date, the date on which this asset was created or acquired, and funds spent on doing so. And also the entity, very importantly, the entity who owns this asset. Again, as we all know, due to the amended rules in 2021, the company who is funding such a CSR project cannot hold the ownership of such assets and needs to transfer the ownership to, say, a Section 8 company or a registered public trust or a society, a registered society. All of these should have charitable objectives and also CSR registration number. The ownership can also be transferred directly to the beneficiaries of the program. There could be on-ground self-help groups, any community collectives, or a public authority. So a company cannot hold the ownership, it has to be transferred. What we advise our clients is they can ask their NGO partners who are implementing the projects to share details of all capital assets that they have created or acquired through their CSR programs. So it becomes easy for the corporate to report on them. Any questions about that? We will take in the Q&A section. Moving on, the last part, which is about authorization of the information that the company has provided in this entire form CSR2 has to be done by an authorized director. And you also have to mention his or her DIN and the designation. DIN stands for Director's Identification Number, which is generally provided by the MCA to an individual who is appointed as a director of a company. So that brings us to the end of how to fill the form and what are the nuances of that. But what we have done is we have collated next steps so that it will help you to determine what all you need to collate in order to fill the form for the last financial year as well as the current financial year. So if you see here on the left hand side, for the reporting period of 2021, as all companies by now must have already filled their MCA report on CSR, and all the other annual statutory filings also must be completed. Hence, this form CSR2 has to be separately filed. But please remember the date of 31st March 22, which is almost in a month's time. On the right hand side, we are talking about financial year 21-22. For that, you will need to fill this form CSR2 as an addendum to other statutory filings. So you see here some examples, AOC4, AOC XBRL. So these are some statutory disclosures that a company does depending on the kind of your business. So whenever these are filed, as an addendum to that, you have to also put this form CSR2. You may want to take a screenshot of this slide so that you can keep it handy while filing the forms. Right. I think we are good to move to the Q&A section.
Thanks, Tejashree. We have a question here. The question was, it was earlier mandatory to report and voluntary to spend.
Right.
And this is, of course, the very early days of the law where it was pretty much like if you don't spend, the only obligation you have is to explain why you didn't spend, right?
Correct. Correct.
So what if the CSR amounts are not accrued at all in the books, then how do we report it? Now, I see multiple scenarios here. One is that you chose for years not to spend, and so there is no CSR amount to report.
Right.
Or you have unspent of previous years and you're not sure about how to report it. Looking at both scenarios, your thoughts on that?
Right. So in case if your profits are not enough that you qualify for, or any of these three qualifying criteria do not push you over the threshold of spending, and you don't have any obligation to spend the 2%, then you need not report on it, because that's just a voluntary spending that you have done. Also, through the amended rules and the FAQs subsequently, we now know that mere spending is not enough, or mere disbursal to the NGOs is not enough. The company has to be responsible for the utilization of that money as well. So in case if you're obligated to spend, then you have to be responsible for the entire cycle of that utilization and report through your or attest through your CFO certification that so and so money has been spent and utilized in the right
I think
manner.
we have a clarification, Tejashree, from the poster that it seems that they have had the obligation but not accrued in the books in past years. Yeah, so pretty much the same thing, I'm guessing.
Yeah.
It's not directly shown in the books. Not sure how you can deal with that directly, because technically if it's accrued in the books, you can report it, and you would have wanted to maintain consistency to what you have reported previously as well. You can't suddenly have a complete change from what you've had in the previous years. Do reach out to us personally if you want to go through this. We are of course available on our website in the resources section, and we can deal with this in detail. Some of the other questions we've had is that capital assets acquired by the CSR partners from our funding have to be shown in that form. Is the understanding correct? I'm guessing this is referring to capital assets acquired as part of CSR projects as well.
Correct. So any capital assets acquired or created by the CSR partner under the CSR project, which is funded by the company, all have to be disclosed. And the ownership pattern as well.
Great. Nidhi here has a very important question. If there is unspent balance under any MOU and the donor is not reverting back for the treatment of balance, can this be used as per entity's discretion? Also, how to document it? And does an email to the donor mentioning the proposed usage of funds by the implementing entity and the deadline for reverting in case of any issue from donors serves the purpose for this? So typically what we would do with the project is, if there is leftover amount, we would come up with a plan for how to spend it, share this with the donor. Is that something that would still pass today?
Right. So if this question is from the NGO side that they have some unspent money, so you actually have to return it back to the donor that has given you that money. In the books of in your books, how to show it, it can be shown as a reversal, but you can talk to your CAs or auditors about it. And when you say, can this be used as per entity's discretion? This entity meaning the donor entity or the recipient entity?
Let's assume here that this is going to be the recipient's discretion.
Right. I don't think this will work in a unilateral manner. It has to be kind of in consensus with the donor as well, what the plan for utilization of that unspent money, or even for that matter, the surplus that the NGOs earn in terms of interest, on the funds which are donated to them. So it can't be done unilaterally.
Great. We also have a similar kind of question from Ajay. Please provide best practice in case contribution for previous years for ongoing projects to NGOs has not been utilized by NGOs, as this is required to be spent by NGOs in the future financial years as per agreement. So we're typically talking about either a multi-year MOU, I'm guessing. Are the NGOs required to transfer the funds back to the corporate? So kind of a mixture of two things, how you should have set that up as an ongoing project. Is it not an ongoing project? If it's not an ongoing project and you have a multi-year kind of spend that you've made, do you need to transfer that back?
See, even if it is an ongoing project, the money has to follow the route. The money has to come back.
I think we've just lost Tejashree's connection there. Just a moment, or is it me?
Can you hear me?
Yeah, we can hear you again. Yeah.
Right.
If you would take that question again.
Yeah, sure. So so what I was saying is, no matter how much amount the NGOs hold or how long the project is envisaged to go for, every year the same route has to be followed, because your unspent CSR account is opened for every financial year. So in all your projects, in all the corporate CSR projects, whatever is unspent amount which is remaining has to be brought back, put in the CSR bank account, And then that has to be given back to the NGO partners. There is another way which some companies prefer to follow, which is not bringing the unspent amount back from the NGOs, but from their own pocket, putting equivalent amount of the money in the unspent CSR account. So that is also possible, but that route has to be shown.
Got it. Another question here, is it possible to utilize the unspent amount of previous years by switching the funds from one category to another category of project, from healthcare to education?
Sure, I mean, any change is possible. Partners you can change, cause areas you can change, locations you can change, but all these changes must be approved by company's board. That's the only prerequisite.
We also have another question here. As part of CSR program, if company has created an asset in 2012 and yet continues to only support the program and no claim over that assets, how do we treat these assets as currently sitting in the company book of accounts? So this is pre-CSR law that the asset has been created.
Right. I think Kajal wants to answer this question.
So I was coming from, so the rule also says that any capital assets created through the CSR programs in the prior years as well will need to be transferred to either an NGO or a group of beneficiaries, right? So the transfer would still need to happen, and the same will need to be disclosed in the CSR form and the MCA report.
Thank you, Kajal. Interesting question from Pradeep Kumar. How can we report the expense towards CSR data management in case it is managed by a third party?
So the amended rules very clearly say that all the money that you would spend on CSR project monitoring, reporting, and basically data management cannot be going towards your 5% administrative cost. And that very much accounts towards your 95% or the project cost. So it can be part of the project cost and not the 5% that goes towards your admin.
Got it. I'm now going to look at just a few questions in the chat as well that were not raised on the Q&A. We have a question here. We have programs that earn revenue based on our sustainability plan. Will that count as revenue earned, even if it's an NGO entity as an FPO that earns it? I'm assuming FPO is farmer producing organization or company. My assumption is because it's not actually coming back to the company that it wouldn't apply in this case.
Right.
If the funds are still being retained by the nonprofit.
By the nonprofit, yes.
Yeah. We get this question quite frequently, and I feel like it's a refresher for everyone. What is the definition of ongoing and other than ongoing programs?
Right. So any project which spills over a tenure of one financial year is called as ongoing project. And any project which is contained within one single financial year is an other than ongoing project.
Excellent. There was a question here as in what needs to be done for any unspent from grant 1920. The NGO has not been able to utilize the 100% of the grant amount. I think we've covered that as well.
Yeah.
Yeah. And Ankit has raised a question. Should companies again need to take approval from the board committee on final unspent amount for the particular financial year, even if they have already taken approval at the beginning of the financial year?
Approval on unspent, or the plan for using the unspent amount, right? I'm assuming it is that.
It's not clear.
Right.
But I would assume that that would be the goal.
Right. So any plan that you are making to spend your CSR budget, be it unspent or the full budget of that particular financial year, everything has to be approved by the board.
Got it. Juhi's raised a question here. What is the annual action plan? Does that need to be approved by the board at the start of the financial year? So again, something that came in January, looking at the annual action plan for each project being created. There are, of course, terms for this, and we create a handy little table for this as well for our clients. And yes, it does need to be shared with and approved by the board at the start of the financial year. Interesting question. Is donated software considered an asset?
Kajal, you want to take this question?
So in simple terms, in what we have seen, capital asset would mean that anything that has a life of over more than 1 year, right? So it'll be best to get a declaration from the NGO on what capital assets have been created through that CSR program and make the disclosures accordingly.
Can spending for MIS platform development be calculated under 5% or admin cost or 95% other?
Yeah, I mean, assuming that the MIS is for monitoring of a particular project and data management of that. So it is part of your project cost, not as administrative cost.
Absolutely. What is the timeline to utilize the corpus generated from CSR projects?
So they mean the surplus, I guess, I'm guessing, generated through the CSR project, right? So there is no timeline as such, but because since some NGOs earn that surplus on a quarterly basis or an annual basis, so that disclosure and the declaration definitely needs to come in from the NGO, and the same can be utilized in the next reporting year as well. And the same will need to be reported in the MCA report of the year during which it gets utilized.
Excellent. Gaurav here has raised a question. Say an ongoing project duration is 7 years, but in the instruction kit of Form CSR2, it is mentioned as project duration account not exceeding 48 months. Just wanted to understand how to present this in the form. So interesting, because of course, ongoing projects were only introduced itself as a concept recently. Yes. So how to deal with, and we typically get this across a lot of clients who have been working with the same nonprofit and the same project over multi-years. How should they account for this?
So if this duration is 7 years, and I'm assuming it's from earlier years and not a plan going forward, because going forward, you will contain that project under 4 years. So if the duration is from past 7 years, then you can, kind of recreate the MOU, kind of break that and start a fresh MOU so that you can assign the KPIs accordingly and design the project for the 3 years, which is 0 plus 3 years. That could be one way.
Yep. Okay. A question from Dhaval. The admin costs bear by, I'm assuming it means borne by the NGO for project execution will be considered as CSR admin cost.
No, so this cost is different from the 5% administrative cost. And this cost, which is borne by the NGO, is part of the overall project cost and not the 5%.
Can the expenditure incurred to develop the digital system to monitor the CSR spend be part of CSR admin cost? I think, again, this is coming back to MIS, which we have already discussed as well, as to whether you can put that within your 95%. I think looking, sorry, go ahead, Tejashree.
No, it's the similar question I'm saying.
Yeah.
You've addressed it.
Yeah, I think generally now getting to a stage where there is similarity in the questions. So if there is anything new, then we might continue. There is another one we've had is, what if companies have not opened an unspent account for 2021 and have given extension to NGOs to utilize the funds for the same financial year? Is it a breach of the amendment?
Kajal, you want to answer that question? I think.
Right. So we understand that last year the clarifications and the FAQs came in late, and a lot of companies, did not open the bank account. Right. So it's best at this stage to consult with your auditors and make the disclosures accordingly. Right.
Thank you, Kajal. Last bunch that we're looking at here, from Juhi, to my understanding, Form CSR2 is only to be filled for FY 2021. From next year onwards, I'm assuming it's 2021, although it says 21-21. And from next year onwards, it will form part of Form AOC4, AOC4 XBRL, and CSR Form 2 will not need to be filled at all. Would that be the case?
No. So for
No.
Yeah, so since those statutory filings have already been done for FY21, at this stage, this form will need to be filed separately. But from FY22, the CSR Form 2 will be a part of those statutory filings itself. Right? So this CSR Form 2 needs to be filled from FY21 and onwards for all the years going forward.
Interesting question from Ankit in the chat. With the introduction of ongoing and other than ongoing, other than ongoing projects, is the concept of no cost extension disappearing? No cost extension is typically done for the agreement duration, not necessarily for CSR law purposes. So I'm guessing even though you have a multi-year project, you may still be given a no cost extension because you will have signed an MOU for it. And if the duration is exceeding that duration, whatever you have set, whether it's 2 years or 3 years, then you may still need a no cost extension. Just from a legal perspective, not necessarily from a CSR law perspective. So do keep that in mind. Okay. A question here, these provisions are applied for CSR donation received by NGO and not other sources of funds for NGO, i.e. interest income, etc. Any thoughts?
Yeah, these rules are only applicable for the CSR donations and not other funding channels.
Okay. And I think since we are now coming to the conclusion, we're going to take our last one or two. So if there is an unspent amount of FY 19-20 and the 3 years are completing on March 2022, will it mandatorily be utilized by March 2022 as 3 years of ongoing project is complete and funds are transferred to new ongoing project?
Yeah. So all these, the amended CSR rules that were released in FY21 are applicable for the projects of FY21 and onwards. So the concept of ongoing, other than ongoing, or treatment of unspent funds, etc., do not apply to the projects that were undertaken in 1920 or prior to that.
Great. I think we've pretty much covered everything and there are no more open questions on the Q&A. So we may come to a conclusion now within time. It's been great to host you all. It's been great to see your questions and your participation. Thank you so much for joining us. There will, of course, be more webinars as the law keeps changing. We've seen over the last 2 years, there has been a real evolution in the law, in the FAQs, constant changes. Again, I do encourage you, reach out to us from the resources section if you still have something that you want to resolve or any thoughts on your mind. We will try and answer it. The other thing I would also say is if you need more clarification, also speak to your auditor as well. I know not all auditors are 100% familiar with CSR law and the constant changes, but at the end of the day, they are your auditor. They're going to review the paperwork as well. So make sure they're on board with whatever you're putting together as well. Thank you, everyone.
Thank you, everyone, for joining. Have a good day. Bye.
You too.